Now, the next session will look at REITs and listed properties in Africa. Have we gone from talk to reality in some key markets like Kenya, Nigeria, and Morocco? Please help me welcome our moderator for this session, who will be joining us virtually, Niyi Adeleye, Real Estate Finance Head for Africa Regions, a Standard Bank, and this panel to take us through this topic. Joining him, please help me welcome Raghav Gandhi, Managing Director at Acorn Investment Management Limited. Can I please just ask Tolu Sokenu, Investment Management Director at Actis, to maybe take the seat at the far end, because I will be showing you a countdown of the time so that you can help guide with the time for our panel. Nasser, Benjelloun, Head of Investment at REIM Partners, and Eyal Shevel, Head of Corporate Rating for Africa at Global Credits Ratings. Now for our panels, if you're just joining us now, I will be counting you down from 20 minutes in case you want to involve the conversation for the audience to take any questions and to extend the conversation to our audience. But other than that, please help me with a round of applause for our panel.
Good morning, all. I have a bit of a Herculean task doing this virtually, but hopefully with the team, we should be able to create a very robust conversation. We have, I think the panel has already been introduced, and maybe I will just highlight a few points on REITs before sort of going into some of the panel discussions and trying to moderate the conversation. Incidentally, on the panel, we have panelists that represent specific countries. So Raghav looks at Kenya, Tolu will sort of speak to Nigeria, and Nasser will speak to Morocco, but possibly sort of North Africa, and some of the themes that Tolu will speak to will probably cover West Africa, and Raghav will probably cover some elements of East Africa. And on the GCCR leg, it will be useful to see what they can share their thoughts on what they see in terms of rating realities as they've been looking at sort of REIT type activity in the markets. So we'll sort of pass the question around like that. From our perspective, or from sort of the objective we wanted to task ourselves with as a panel, the idea was to try to focus on what we as operators in the different sort of markets could do to improve to transform the REIT story from talk to reality. But ahead of that, I wanted to just share a bit of data points. Some of it is a little bit dated, but I think it's quite relevant. So when you look at the leading sort of REIT markets in the world, and US was sort of the initiator of that. REIT market started in 1971. That the US market, as at one of the last sort of data points, had about 224 listed REITs, with a market capitalization of well over $1 billion, or well over $1 trillion, and returns were sort of averaging sort of 19%. The United Kingdom followed suit with about in 2007, and they had about 37 companies with about with market capitalization of closer to $100 billion. Singapore, which was acting as a bit of an anchor for the Eastern markets, had about 37 REITs with about $34 billion in market cap. South Africa, which leads the African market in terms of REIT performance, had about 29 listed REITs. The REIT market started in 2013 and about $19 billion in terms of market cap. Kenya and Nigeria, which tend to be the more active markets in sub-Saharan Africa, outside of South Africa, had roughly just about, Kenya has about 2 or 3 REITs, Nigeria has about 3 REITs. Market cap for both of them is still roughly below $100 billion, $100 million rather, across both markets. Nigeria is roughly about $200 million. The idea there is to highlight the scale of the gap, but also the impact, the economic impact a well-functioning REIT market could have in the economies and in the real estate value chain and life cycle. We think this is topical, and the idea is to just have some discourse around how to sort of improve that. From a Standard Bank point of view, we've worked in a number of the markets to try to activate and to catalyze sort of the development of that market, of the REIT market in the key markets in the continent. And that continues to remain an area of focus for us. Let me start with Tolu and ask a couple of questions that, and we can sort of pass that around the panel. Tolu, I know Actis has been working in the background, doing a couple of things. They've collaborated with a number of other sort of market players. What has been the challenge that you've seen in sort of originating the asset class in the West African market, perhaps? And Raghav, you can maybe pick on elements of that as well after Tolu speaks.
Okay, thank you, Niyi, and thank you everyone for having me today. So I'll start with saying we've been trying to implement this strategy probably since 2004. In fact, that was one of the things we wanted to do when we started out. We wanted to be a developer as well as an investor in long life assets that would ultimately be listed. We chose to do the first parts of our strategy because, quite frankly, there wasn't a stock of quality assets to acquire or property managers and developers to develop and run these assets in sub-Saharan Africa outside of South Africa. But since then, 15 years, 17 years hence, we now have a good pool of assets. And we've now been on a journey of raising an income fund product. And the challenges that we've seen, and as you alluded to earlier, you have about 3 REITs in Nigeria specifically. And the challenges that we've seen come down to 2 broad buckets. I think the first will just be the product, the real estate fundamentals. The REITs that have listed have struggled, quite frankly, because the assets that underpin the value proposition have not been compelling enough for institutional or retail investors to participate. So what am I talking about? I'm talking about ensuring that the assets are well located, ensuring that the assets are well tenanted, ensuring that the assets are well managed, they're built to be future-proof, and they generate the kind of cash flows that will be attractive to institutional investors. The second point would be more along the capital markets ends of things. I think if you look at how investors think about it, they compare, the yield from a real estate investment trust or income product to what they can get in other instruments, right? So if a REIT is yielding below what you can get on a short-dated treasury, go figure what the investor is going to pick. We've struggled with that in our markets. A lot of that has been, quite frankly, on our side as practitioners, not educating the investment community as to the benefits of having these types of products in your portfolio and how to think about them more on a long-term basis. There have been some other issues with regards to, valuation, transparency, ensuring you unify methodology on valuing assets, etc. So maybe I'll pause there and let the rest of my colleagues maybe give some color as to the challenges that they've seen in their markets.
Raghav, if you pick on that theme, how would you sort of respond to, from a Kenyan East African perspective, the challenges around sort of identifying or creating sort of investable sort of grade of assets that is ideal for sort of REITs and to that target investor class?
Yeah, thanks, Niyi, and good morning, everyone. Niyi, by the way, you look like this celestial being speaking to us down from the sky. Just FYI, it's quite a good look. You know, to piggyback on Tolu's point, actually, as far as, you know, I think the challenge that has been faced is that REITs are typically a reflection of mature markets. And what we find in Kenya is that it's a fairly fragmented market. You don't have such established, you know, branded real estate developers. Typically, a lot of real estate, and I think this is also true for the rest of the region in East Africa. I mean, you know, the market is really filled with a lot of fragmented players, high net worth individuals, family offices who are doing their own, you know, ad hoc real estate developments. And so as a result of that, that kind of builds this credibility gap for investors, right? They're like, if there is a developer that comes up and is you know, able to show sufficient scale and a sufficient track record of delivery of, you know, having a number of projects, it still takes some time to bridge that credibility gap. You have to you know, be patient and showcase what it is that you're doing before you can kind of bring them on board and start getting them to buy in to you know, the opportunities that you're offering, the fund vehicles, whether it's REITs or otherwise. I think, you know, another challenge that we faced when we, particularly on the institutional investor front, is typically a lot of these pension funds that we speak to that are the ideal audience for REITs, they also have a tendency to try and do direct real estate investments, which of course, you know, we can talk till the cows come home and the inherent risks involved in that strategy and what might be driving that. So it's quite interesting, you know, to work through that dynamic, because as was just spoken, at one level they will turn around and say, oh, but you know, government securities will offer us a higher yield than real estate, but on the other side they have real estate in their portfolio. It's just they're doing it by themselves. And you know, sometimes I wonder if 0 to negative returns for them seems to be better than what we're offering. So there is an element of kind of having to you know, kind of show a track record, do that market education to bring them on board, and it requires patience.
Thanks, Raghav. Nasser, can you speak to your experience in terms of asset creation and what the REIT environment is like in Morocco, specifically, and maybe whatever thematic extends to sort of the North African markets?
Good morning.
And yeah.
You hear me? Yeah. Good morning.
Yes,
everyone.
we can.
I'll give some insights on the launch of the REIT sector in Morocco. Activity started less than 3 years ago. As of now, we count 40 REITs for a total asset under management of $4 billion. The most active investors are financial institutions, banks, insurance companies, pension funds, large corporates as well. The first phase was mainly players externalizing their real estate to benefit from a favorable tax framework offered by the REIT sector. The $4 billion asset under management only represent less than 10% of the commercial real estate market. Expectation is that in the near future it will reach $20 billion. And once that the investors are familiar with the REIT framework, I think we will see significant investments and investors willing to expand their portfolio into new assets.
Sorry about that. Would you, Shevel, would you speak to what you are seeing in terms from a rating perspective, in terms of activities in REITs, and what sort of indicators or qualifiers you're looking at, or will be interesting for you to look at in terms of rating of REIT assets or REIT investments?
Okay, thank you. I think our experience in Africa has probably been a bit disappointing in terms of the activity of REITs. I mean, I can't remember when the first REIT in Kenya was, 5 years ago or so, but I mean, there's been very little activity in that market since. The actual fund that was listed hasn't really grown, and it's just almost been a passive type of fund. I mean, I think, there's a lot of opportunities, but yeah, to date, there's been actually very little to analyze. I mean, like I said, most of Acorn's has been the one that's been active lately, but I mean, there's certainly lots of opportunities, I think, for a big REIT to establish itself and to help in that consolidation of the Kenyan market, which would really, I think, drive the liquidity. Because, I mean, from a rating agency, you really want to see a lot of liquidity in the market. You know, the thing about REITs is that because they are required to distribute the majority of their cash, from a credit, it makes it more risky from a credit perspective, because the business model is such that you fund a portion with debt, a portion with equity, and then you distribute all your cash, but you still have to service that debt. So you need to make sure there's sufficient liquidity in the system. Now, if there's no liquidity, now one of the most important ways of having that liquidity is by being able to trade the properties themselves amongst the players. And I mean, I think that is in South Africa over the last 20 years or so that there have been REITs, and before that the listed property funds. I think the biggest thing it did was create a very liquid property market for real fixed assets where you could sell. I mean, it's probably slowed down a lot since COVID here and other problems in the market, but there really was it was easy to, or I mean, reasonably easy and possible to trade portfolios, big assets and that. So it creates a lot of liquidity, which as a rating agency, you always actually want to see in the market. I think we've seen, I mean, in Nigeria also, where there are a couple of REITs, they mainly have been passive REITs, the ones that have been listed to date, is that essentially banks putting a few of their assets into an off-balance sheet type of fund with with intention of running them profitably, but no real drive to expand these into real active portfolios that develop and trade and grow and do all those things. So I think generally our experience has been, I suppose, in that it hasn't got the traction that South Africa experienced in the early 2000s or so, when the property funds started to be listed and people really saw the benefits of listing their personal private portfolios where they held, or the banks saw the benefits of spinning off their big property holdings into liquid investments, which created a lot of value and really drove that early growth in the market then.
Thanks for that, Shevel. Raghav, I think maybe going back to you, how do you see the segment of the market that you play in from a quasi-residential perspective? I mean, we've identified that stock of assets is an issue. how does your strategy sort of potentially resolve that, or should I say address that? Obviously, resolving is a wider sort of market activity or market-driven activity.
No, and I think that's a very key point, Niyi, that you've raised, and I know you alluded to it earlier as well. That for REITs to be successful, they have to scale up, and for them to scale up, they have to have access to good quality assets. Now, for those who might not be familiar, we operate in the purpose-built student accommodation space in Kenya, and we established 2 REITs at the start of 2021. So our strategy for actually tackling this challenge of being able to scale up was essentially to take that problem on ourselves and build a solution. So to give a little bit more color, when I say that we launched 2 REITs, Kenya is fairly unique in the sense that aside from having what we now refer to as an income REIT, and an income REIT is what we're all accustomed to globally. It's a REIT that holds on to steady state, income generating rental properties. What Kenya also introduced was regulations around a development REIT. And a development REIT is essentially like a private equity real estate development fund with the overlay of a REIT, regulations. So essentially what we've done is kind of created this pipeline feeder because we know that the only kind of entity that can provide an income REIT with good quality, institutional grade, purpose-built student accommodation assets is us. So what we also do is we develop our properties through the development REIT. So then what you've created is like this virtuous financing cycle that the development REIT is the pipeline feeder for the income REIT, and whenever properties are available for acquisition from the D REIT into the I REIT will then acquire those assets and therefore provide more cash to the D REIT so that it can continue buying more land and continue developing more assets. So, we didn't think that there was anyone else out there in the market who could do the type of work that we do, the type of buildings that we do. So we said, let's just do it ourselves and scale both REITs up accordingly, kind of hitting a number of, kind of a number of targets ourselves.
Thanks, Raghav. Tolu, in your pathways, what's been the approach in terms of creating, from an active strategy perspective, and even looking at the wider sort of West African market, creating sort of investable assets? Maybe let me reposition it by saying, in terms of sort of following the trajectory into creating REITs. If my knowledge serves me right or well, from an Actis perspective, there's been a greater focus on commercial assets, but you kind of need to balance that with stock that you have, with new stock as well. So what's the thinking in terms of that strategy on your side, if I'm clear enough?
Yeah, no, thank you for that. So I think for us, what we our view is that there was a major gap in the downstream of the value chain. So by that I mean there were no acquirers of the assets that we're developing, us and other developers. Historically, we had a lot of South African REITs and insurance businesses coming to acquire assets, and more recently they've moved on to other climes, and that created a dearth of buyers. We felt that it was important to continue to create the virtuous cycle that Raghav spoke to try to drive the creation of sustainable products. So in our jurisdiction in West Africa, we will struggle at this point in time to have a development REIT. We would need, because people are really yield hungry. So what does that mean? That means that we need to focus more on commercial. Our income fund product has one or two assets that we have developed, which we believe are best in market. However, our strategy is not reliant on Actis. So we're looking to acquire assets from other developers, from other asset holders, and we're actively in the market to do that. But we're focused primarily on assets that are top quality, able to deliver the yield consistently, and and are managed in a professional manner. So that's what we think is the secret sauce to management, and that's what we're looking for more broadly.
Thanks. I think if I pick on the theme from both you and Raghav, resolved differently, it's clear that there needs to be in terms of taking REITs to reality, at least in the immediate term, there needs to be quite a clear synergy between the creator of the asset and the vehicle that converts that asset into that asset pool or portfolio into a REIT-like structure. There still seems to be a shortage of assets in the markets for that market to be free flowing. If we switch over to the supply side, to the demand side of the equation, and Tolu, you alluded to it. One of the realities that we tend to face is that when the products are positioned in the market, the institutional investors that need to, the institutional investors that need to sort of offtake them are comparing the yield and the return to government treasuries, which is perhaps not a fair comparison, given sort of the life cycle of government treasuries compared to REITs and their sort of return profile. The other piece around that element, but we can maybe take that in the second round, is actually the stratification of the investors. So you have your domestic institutional, perhaps your foreign institutional investors, and also some level of participation from retail investors. Going to you, Raghav, what's been the conversation with investors in trying to get them over the line in terms of looking at what the return profile is, but also that investor education piece around is that, in terms of your decision making, how do you allocate enough to the REIT products in your market?
Yeah, exactly. And I think that's been one of the key discussion points. First of all, the pension fund sector in Kenya is sized at about $15 billion, right? The Kenyan government is not going to issue bonds worth $15 billion to be able to satiate, that pool of capital. And so really, when we are speaking to investors, there is the focus on the need for diversification, which they realize, they appreciate that. And then once you get to that stage, then it's about convincing them or speaking to them about let's say the benefits of, moving away from direct investments in real estate and thinking more along the lines of indirect real estate investments. A majority of them are privy to the returns that they've achieved from their own investments. I think, I talked about 0 to negative largely being achieved by a number of pension funds from their direct real estate projects. And so, when we're speaking to them about kind of veering themselves more to our side and the REITs that we offer, what we have focused quite a bit on, and this is part of that market education, is being able to convey the track record, the delivery expertise that we have in order to be able to deliver those returns, right? The fact is that real estate is a very complex asset class. It's a very capital-intensive asset class, which means that any mistake that is made, even minor, can lead to significant losses. And when you're a pension fund, given the responsibility, the fiduciary responsibility that is there for pension funds, that's not a risk that you should be taking on yourself by trying to undertake these, real estate investments. And so, for us, the focus has been, being able to adequately or suitably convey our ability to deliver those returns, that they require for their pension fund targets. And that's something that has required time and effort. It's required, engagements over conferences, one-on-one meetings, private sessions. One thing I've accepted is that whereas one would hope that investment decisions, should take like 3 months, now we budget for 6 to 9 months from the time that we kind of have the initial pitch to the time that we get the approval. That you have to stick it out, and you have to be there to address any queries as they come along, and so therefore you also have to manage your funding plan accordingly, right? So that if you know that it's something that's going to take 9 months to come through to fructify, then you got to start your pipeline building much sooner.
Thanks, Raghav. I think you hit on an important theme there. The investor education part of the fundraising cycle remains quite important. So in terms of sort of staging execution or conversion to REITs, that's a component that needs to really be factored in, particularly at least from a East and West African perspective, where the investor realities or the comparisons need to be, and the myths and biases need to be sort of addressed. Nasser, do you want to speak to what the Moroccan and sort of North African realities are with regards to investor appetite? I think you shared some points earlier. It seems to obviously have a slightly different trajectory from what we've seen in East and West Africa.
The returns in Morocco are between 6 and 8% for REITs. They are all of them closed-end funds, non-listed. Treasury bonds, just to give a comparable, is at around 2%. So the spread is still interesting, and there is a strong demand for REIT exposure among institutional investors. I'll just give an example of a recent transaction. REIT also helped the Moroccan state diversify its sources of financing. Moroccan state signed a sale and leaseback with the pension fund on $500 million university hospital centers that are detained by REITs now. So there is a strong appetite from investors, and it's more a lack of high quality real estate products. And I'll just come back quickly on the supply side. Developers anticipated the need of these REITs. Another example we've seen in Casablanca, so the main economical hub in Morocco, a record year with more than 3,000 square meters of office spaces under construction right now. So developers are getting ready to provide assets to the REIT sector.
But Nasser, Shevel, do you have anything to add to that, to the conversation around that, or around sort of that demand side conversation?
Yeah, I think in my role, I get to chat to, all sides of the industry, the developers, the the investors, the rangers, you know. And I mean, they all seem to want the same thing, but it's, you know, everybody's, I suppose, on a different page. Investors will tell you that they are hungry for good quality assets. I mean, I know in Kenya in particular, there's just, they would like some, and in Nigeria, some sort of diversification away from government bonds into good quality corporate paper. And the REITs are probably the best, a strong REIT, you know, is probably the best position to deliver that. You know, we've seen it again, I'm just bringing South Africa as an example, but that they are amongst the most active issuers of equity, of notes, of refinancing activity in the market, because there's always this constant refinancing need if the market is active. So while the investors are, on the one hand, say they want it, I mean, I understand. On the other hand, the developers say, well, they're reluctant to invest because, you know, they may not fully understand the property market. But I think the more the problem is that the key metrics that you would look for are somewhat vague when you don't have a very active market. You know, it's hard to see exactly what the performance is of you know, where rental rates are going, you know, what are the occupancy levels, especially when there's a lot, you know, in like a place like Morocco, there's been a lot of development, there are a lot of buildings there. You know, it's very difficult, and that uncertainty and that lack of knowledge, you know, prevents, I suppose, investors from investing. But, you know, but I think there is room definitely to I suppose, improve the information flow. The truth is, again, the only way it will really, really improve is that if there are more sort of public transactions in the property market, because there are reports in what rental rates are in this node and what they are in that node, but really when you sell a building and it's known and the price, that discovery is what really gives your market the clarity that it needs and gives investors the confidence that it needs. So it's a bit of a chicken and an egg situation, but I think, again, the investors are there, but they are, I mean, I think they're very reluctant, and I mean, to lend. So I think it almost needs a lot of impetus from the REIT side to really demonstrate the value of the business model and the way it can create long-term value for investors.
Thanks, Shevel. I think if I try to summarize from what's coming through, there is still a ways to go in I mean, we have to stage the way we create the assets in the market. When you look at it from the demand side, from the supply side, you still have to sort of continue to encourage investments in the creation of investable investment grade assets that will ideally qualify for it. And, you know, you can follow different strategies in doing that. But I guess maybe also manage investor expectation to clarify that the growth and the expansion of REITs as a product is still going through a gradual trajectory, and not you won't immediately suddenly start finding 10 REITs in the market because, one, maybe the assets are not there. Two, you need greater transparency for investor confidence, both at the institutional level as well as even at the retail level in the markets where retail investors are needed to establish that price discovery of the REITs. Let me change gears a little and then talk about how the REIT market could potentially, what we think the role of the REIT market could be in our different sort of regions, in terms of sort of catalyzing the real estate market, completing the life cycle and the real estate ecosystem. And let me start with you, Raghav, and you can perhaps link it to some of the activities that you have you are seeing. One on your side, but maybe also on a wider along the path of sort of other sort of market players as well.
Sure, Niyi. By the way, we've just had the 15-minute marker shown to us, so just FYI.
Thank you.
Look, from our side, I mean, my opinion is that I think REITs are extremely important. I said at the start that, in developed markets, what you've seen is that REITs have been a reflection of a mature real estate market, and I actually think that maybe in Africa, it can work in reverse, where it's almost like a pull factor where REITs mature the real estate markets. And I think, I'm frankly very encouraged by the progress that has been seen in the last 12 to 18 months. There is a lot more interest that we're seeing in Kenya for other REITs to be established, other issuers to come to the front, and I think that's important because to the point that you made, it completes the cycle, and by completing the cycle, what you're also doing is you're able to recycle the cash back into the system and therefore fulfill the needs, the real estate needs that are there, in the market. We operate in the housing space, in the rental housing space. We're providing affordable rental housing, and we're all familiar with across the continent there is a demand-supply housing gap, and if a vehicle such as the REIT can actually help address that gap and take on that challenge, I think that it should bode well for the future. I've been in real estate for 15 years now, over 15 years, working across emerging markets, and across all those markets, the real estate sector has probably the worst reputation of all industries, right? I mean, we're not renowned for transparency. We're not renowned for doing things by the book. But the great thing is, when you have an overlay of a REIT, then it imposes, for the lack of a better word, certain transparency measures, good corporate governance standards. And I think if that's something that we can bring on board as a result of taking on more and more REITs, then it'll just help professionalize the real estate sector, which I think definitely from an East African perspective is very much required.
Thanks, Raghav. Tolu, I don't know whether you're seeing something slightly different on the West African side. If you want to maybe add to that, and then go ahead.
Yeah, no. I mean, I echo Raghav's comments. I think, if we are able to set up the REITs such that they perform properly, they do what they're supposed to do. Ultimately, they're supposed to be an inflation hedge, right? And fundamentally, that's what real estate is supposed to do. And if we're able to ensure that it does that for the institutional and retail guys, then we will see a lot more capital come into the market. We'll see the standards of the core product being developed, like he said, the governance and all that, stand up and truly take part in the capital markets and in the economy. So yeah, I fully agree with him. I echo his sentiments. I think the one point that I do want to raise is that a lot of what is happening is kind of this D-REIT, I-REIT thing, whereby the biggest issue is the conflict, right? Is that the developers are the guys who are now trying to list the REITs, and that continues to be a challenge, which we need to figure a way to bifurcate that to further spur growth in the sector.
Thanks, Raghav, Tolu. I will ask you to virtually extend my hand to ask for questions in the audience. And let's see if I think we have about 10 minutes left. If there are one or two questions coming through from the audience, otherwise we would maybe speak to one or two points and then try and close out on time.
I think we have one question for the gentleman in the blue jacket.
one complication of the industry, and just wanted to see, in terms of regarding different African markets, has there been a general consensus for basic accounting standards? Thank you.
Yeah, so I think that's one of the points that I raised, right? One of the biggest challenges that we've had is just around reporting, how you measure the transactions across different operators within the markets. And that has created a lot of heartburn for institutional investors, right? So how do you value versus how I value? Is there a set standard? And then when you get down to the retail guys, how do they appraise what they're investing in? And I think that is something that we need to standardize across the board. I think we had a conversation yesterday around, one of the things that we can do as practitioners is start to, come together as a body to try and influence a standard set of reporting across the continent, and ensuring that we can influence in other manners as well, which will really, really help things.
Yeah, what we do actually, and Tolu's completely right. It requires let's call it a continental-wide effort to put together a reporting framework. But what we do is, as it's not required, but as part of our annual reporting process, we actually report EPRA statistics. So EPRA is the European equivalent of reporting standards. So we just have that as an excerpt. I'm sure most people don't know what they're seeing there, but it's okay.
Same in Morocco.
Sorry.
Same standards in Morocco. We're using EPR.
Yeah. So it's. I think it's important because you're showing your willingness to be transparent and communicate the results as they should be to investors.
Yeah, I think. Yeah, just to add there, on the analysis side, our biggest challenge is really the accounting standards and the methods of valuation and how believable are they, I often joke, whenever I speak to a REIT manager, he'll always tell me, our valuations are very conservative, but that guy's fund, if you look at them, they are very bullish on their prices. You can't accept that, but everybody just tells you the same thing. I think the problem is, especially when going into Africa, is that the people who trying to be transparent are such a small part of the market that the data again is not that. It's not so comparable. It's not so transparent because the vast majority is not transparent, and you don't really know what's going on in the accounting standards or the data that's going into those accounting standards, the figures and how those are being calculated. So it always, takes a lot of caution, and when we do analysis, a lot of haircuts to values and assumptions and that type of thing. And unfortunately, what we actually do see is more often than not, forecasts, especially in the development side, are not met. They get thereabouts sometimes, but in general, they're not, they run behind, and the forecasts are not met, which, just again adds to some of the challenges of looking at the sector. But there is a sector, and it is growing, and, there is real money being raised, and most of it is performing. So, you need a lot of caution, obviously, but there is ways to look at it.
Maybe just to add to that, there clearly are different standards to be looked at. There's the valuation standard, there's the accounting and reporting standards. I think one of the things in some of the conversations we've been involved with is to ensure that the Red Book RICS valuation standards are applied. There is a national sovereignty sort of consideration that everybody tends to seek to manage. And you see that in the deployment of funds. And maybe Raghav can speak to that, Tolu can speak to that as well, around people wanting the liquidity that you generate to be deployed, at least in your primary country to start with. And with that, but I think the balance of that is to acknowledge that the investor class or investor strata will both encompass, in some cases, international investors, domestic investors, and obviously retail investors. So that greater level of transparency and standardization becomes something that is required. I don't know if there's any other question.
Yeah, there's one question, celestial being. So let's go to that.
Thank you, Alistair Anderson from Property Flash. I just was wondering, it seems that REITs in Africa kind of operate in silos, so they only really invest in one market. So Kenya, Morocco, etc. I think Grit's the only one that's kind of gone across the continent. So I'm wondering, do you think we need to see more cross-investing like that to actually grow the liquidity, grow the credibility of the sector?
You're talking about REITs being able to, a REIT being able to invest cross-border, is it?
Across borders, yeah.
Okay.
Yeah, I can take it. So from the Nigeria perspective, the income trust product primarily is funded and invested by the pension fund administrators. And they have a requirement that 60% of their capital has to go into Nigerian projects or Nigerian assets, which is the point, country sovereignty that Niyi was alluding to. You can invest 40% outside of Nigeria, but the catch-22 is that you need dollars to be able to invest, and they don't have access to dollars, right? So they're effectively trapped. So, I mean, this is all part of the point of, we need to band together to start to work and lobby, right, to ensure that pension assets for pensioners are protected, and it doesn't necessarily need to go into Nigeria. It should be able to go outside to ensure that they get the best return for their hard-earned work. So, yeah, great point.
I think, yeah, I mean, I'll talk about the South African REITs, I mean, have been very successful in investing in many countries, but they have not been successful in Africa, in other African countries. Almost every single one of them has sold the assets that they developed. And I think the case for developing in another country is that you need to have real on-the-ground teams and knowledge, and you can't manage it from another country. And I think for the South African REITs, the problem is that the opportunities are not necessarily big enough to develop those on-the-ground teams fully, and they try to manage them from South Africa and with South African retailers, and almost every single one has sold out of those portfolios. Where they were successful, I'd say, in Eastern Europe is because they did develop those on-the-ground teams and portfolios of scale, where they really built up a very good knowledge base of particularly Eastern Europe, I mean, in that sense. I think Africa being much more challenging and differences in laws and just, how business is done, and the environment and the attitudes in each country, you need to have that on-the-ground presence. And I suppose it's difficult, I think, to justify that if you've only got one building or two buildings here or there. So I think it's still, you need to have scale in each market. You can't just expand without that necessarily scale.
Thanks. I guess we're running out of time, so let me try to wrap up and manage time as part of my responsibilities. I think there is a fair balance to be met there. Tolu sort of alluded to it. There will be some national sovereignty issues in terms of how capital is utilized. I think given the demand-supply gap for assets in many of the markets, if you look at the South African markets, even when you look at the trajectory, you'd find that the initial market focus was the South African market, and probably remains largely that. About 60-70% of the assets are South African assets. As that market got saturated, then it created the excess liquidity created opportunities to go into other markets. And I think it is about that staging. So you probably have to focus on your core markets where there are real gaps and when you talk about risk appetite and understanding the product from that domestic institutional investor perspective, there's greater alignment there. So those realities become some of the considerations that the regulators in those markets think about before then starting to release the tap to allow sort of greater cross-border investments. it does sound somewhat reasonable if you think about protection of pension funds and the use of the pension funds and the sophistication that is required to actually do international investing. Raghav, you mentioned it even at a domestic level. If you look at how pension funds have invested in real estate from an East African perspective, they haven't done that so well. So when you now start taking that risk at a cross-border level, that also becomes even a bit more challenging. I think we've had a good discourse. Let me thank the panelists, Shevel, Raghav, Nasser, and Tolu. I don't know if you have one final word to say. I think we're down to the wire.
Thank you so much. Unfortunately, we don't have any more minutes for a few more comments, but thank you for that incredible and wonderfully moderated session. Thank you so much for joining us, Niyi. Please, a round of applause for our panel.
Thank you.